Hello everyone, welcome to Accounting 312. In this video, we talk about Chapter 11, Decision Making and Relevant Information. If you read a textbook or if you went to my class, you should know this chapter basically talking about one word, which is relevant, So what's the meaning of relevant? I'll give you an example. Let's first think about your daily life. You are working on the Accounting 312 assignment. And then you found out, hey, there is a question, you don't really know how to solve it. And now you have my note, you have my handout, right? Let's say, with my handout, you can solve the question. Without my handout, you cannot solve the question. Then my handout will be relevant for you to solve the question because the outcome, they are different with and without having the handout, right? We said with it, you can solve it. Without it, you cannot solve it. So there is a difference. Let's think about another situation. You're working on my assignment, and then you found out, hey, there is a question. You don't really know how to do it. Okay, so you have my handout. But even you read my handout, you still cannot solve the question. Then my handout in this situation will be irrelevant to that question because there is no difference with or without my handout. You cannot solve it with or without it, right? So there is no difference. So that is one simple example of being relevant. Think about, for one thing, you always kind of have two choices, right? You either do it or you don't do it. You either see your girlfriend, don't see your girlfriend. You either sleep or don't sleep. We always say to be or not to be. That's a question. So if there is a difference with your two choices, then that piece of information is relevant. Think about our assignment and handout example. Now you have two choices, right? One is with my handout. One is without my handout, right? And now you kind of think about, you have a question. So we said the first situation is for the question one, let's say. For the question one, with my handout, you can solve it, okay? With my handout, you can solve it. Without my handout, you cannot solve it. So there is a difference, right? You can say the difference is the solve it minus the not solving it. So there is a difference. However, in the second situation, or we call there is another question, question two, we say without my handout, you cannot solve it. With my handout, you still cannot solve it, right? Then in this situation, there is no difference because no matter what you do, you cannot solve your question. In this situation, my handout is useless to your question too. So we call this will be irrelevant. And this is relevant. And this is irrelevant. That is the general idea of being relevant. Whether your choice, your action will make differences, yes or no. If there is difference, then that most likely will be relevant. Actually, that is relevant. If there is no difference, then that's irrelevant. So the textbook said to be relevant, you have to meet two criteria. One is happens in the future, which we say whatever happened in the past, we call it water under the bridge, we call it don't cry for the spilled milk or whatever. Because no matter what you do, you cannot take the time trying to go back to correct yourself, right? So what already happened, because they will not be relevant. We always look forward, we move forward. So what already happened, we call it sunk cost, or we call it a historical cost. And we say those costs are always irrelevant for our decision making. Two examples is, one is the purchase price or purchase cost of your equipment. The other one is related with your equipment, we call it the depreciation expense. So let's say I bought my phone, right? I say 3 months ago, and I spent $1,000 at that moment. Now I realize that the phone is on sale and it's only $800. I cannot return it, I cannot exchange it, I cannot price match or whatever, right? Then the $1,000 that I spent, I already paid out of my pocket, will be irrelevant. Because no matter how much I regret, how much I cry, I cannot go back to 3 months ago. You know, I don't have a magic. I wish I can. I don't have magic, unfortunately, to go back to 3 months ago and tell myself, hey, don't go back, don't buy this iPhone, don't buy this phone, wait for 3 months, you will get a better deal. I cannot do that. That's already the $1,000 I paid is already out of my pocket. I did lose the $1,000, right? I cannot change anything. So the purchase price of this phone will be irrelevant. And also the depreciation expense related with this phone will be irrelevant, because I kind of understand, the way I understand is kind of like the phone is the mom, the depreciation expense is related. We call it a control account, right, in your financial accounting. So it's related with your original equipment. If the original equipment is irrelevant, most likely the depreciation expense will be also irrelevant. Okay, so first it happens in the future, and then you could say, hey, so all the future information, they are relevant. That's also not right. We talk about this. You have to make differences, right? You have to make differences. So for this situation, with or without my note, you cannot solve the question. So then it happens in the future, but there is no difference. Therefore, the question 2 for the note, my handout will be useless, will be irrelevant, will be no difference for the question 2. So it doesn't make any difference. We cannot call it as relevant information. To be relevant, has to happen in the future and also has to make differences. Okay, now, long story short, let's just look at the several different situations. First one, we call it one-time special order. So what does this mean is that you have one-time special order, like you have your typical regular customer, but then you're working on your own business, someone approaches to you, said, hey, I have like, you know, just a one-time order. I'm not going to really work with you for long term. I'm not going to become your regular, you know, typical long-term customer. Can you do me a favor, just, you know, work on this contract for one time, you know, 3 months, 2 months, or whatever. So we don't look at the long term. In the long term, everything is relevant, honestly. Let's say you may think, hey, if there is an earthquake in another country, I don't know, let's say African country or whatever, it has nothing to do with me. But in the long term, maybe the earthquake will change the material there, the material will affect your purchase cost of your material, which will affect your selling price or whatever, right? So in the long term, everything is related and relevant, but we only think about short term in this chapter. So look at this example. You drop this class and then you are making your pencil. You are working now, you know, you can make 20 pencils, but you only make 10 pencils, so you have extra capacity. You can take my order, right? Your regular selling price is 50, and then you have variable cost $1, you have fixed manufacturing 100, and then fixed general administrative also 200. Now I want to buy 5 pencils, and then I only give you $20, right? You may say, hey, I usually sell at 50. Why you just give me 20? I'm not going to take your order. I said, wait. Let's look at the numbers. Let's do the calculation. So in this chapter, we always have 3 columns, right? Do this, not do this, the difference or whatever. So let's look at whether you should take my order, yes or no. Your first choice is you take my order, right? Second choice is you not take my order, and then we look at the difference. So we look at the 5 pencils. Look at the 5 pencils. If you take my order, you will generate extra $100 revenue, right? Because you take my order, you can sell the 5 pencils to me. Each one is $20. So you will get 100 extra revenue. If you don't take my order, you don't get anything. So that's our revenue. But in order to make my 5 pencils, you have to pay extra variable cost. You have to buy raw material or whatever. So each one is $1. You are making 5. So you have to spend $5 to make my 5 pencils. If you don't take my order, you don't care, it's 0, right? So this is -5 because this is the cost. How about my fixed manufacturing? Fixed manufacturing, let's just make a simple example. Is your manufacturing department the insurance or the rent, right? So every year you pay $100 to rent your space to manufacture. Without my order, you are not taking my order, you still have to rent that space, right? You have to pay $100. With my order, it said it will not affect your fixed manufacturing or fixed general administrative. You do not need to rent a new space. You don't need to pay new rent or whatever. So with my order, you also just pay $100. You also will pay $100. Therefore, there is no difference. There is no difference for your fixed manufacturing cost. Similarly, for the fixed general administrative, right? Like your CEO's salary. Without my order, every year you pay him $200. As you know, that's not practical, right? We just put $200. With my order, it will not affect that part. So you don't need to hire a new manager or whatever. You still will pay him $200. Therefore, there is no difference, right? There is no difference. So we found out your relevant operating income. With my order, you will get 95 extra. Without my order, you get 0, right? Because you're not really doing anything. So the difference is 95 positive as the income. What should you do then? Now you should say, yes, actually you should take the order, right? You should take the order. Because your operating income will increase by $95 for 5 pencils, right? For 5 pencils. So that is how you use relevant information to solve the question. Think about this. Okay, so now what I want to say, let's look at the question one more time. Your relevant cost to make the special order actually is only this $1 each. So what is the minimum price that you can take the order? What is the minimum price that you can take the order? Actually, it's just your relevant cost. It's just your relevant cost. Now I pay you $20. We found out you should take my order. So if I ask you, if I just pay you $2, you still should take my order, right? Because your relevant cost is only $1. Some of you may say, hey, at least I should sell it to you at least 1.01 or something. At least I should earn some money. I understand that makes sense in the reality, but we just think as long as it's break even, we may think about long term, we may think of other things, you know, non-financial factors or something. So as long as it barely covers our relevant cost, we should take the order. This is for short term. You know, for the long term, that doesn't make sense because long term, we have to really cover our rent or whatever. So we said long term, all the costs, we have to look at the full cost. But for short term, we just look at the relevant cost. As long as the order price is higher than our relevant cost, we should take the order. Okay, so that's it. Let's do some multiple choice, right? Let's do some practice together. Next one said you are having one-time special order, $10 each, and then should you accept this special order? And then we said, yeah, we said, okay, you still have 2 choices, right? Take the order or not take the order. We look at the difference. If you take the order, and then your revenue, each one will increase by 10, but then your variable manufacturing will increase by 6. So your fixed, we said it will not affect your fixed, right? It didn't say, but you just assume it will not affect your fixed, like your rent or whatever. So your operating income, you can find out that will increase by $4 each if you take the order. if you take the order. So we say, yeah, take the order because operating income will increase by $4 each. And also we talk about what is the minimum price for that order. It's actually $6 as long as we cover our relevant cost, which in this case is our variable manufacturing cost. Okay, next one. The relevance is determined by, we said, it's basically the effect on your decision, right? Whether my note is useful, relevant or not, whether it has effect on your question solving. If it helps, then it's useful, it's relevant. If it doesn't help, then it's not useful, it's not relevant. Second, what's the question? We said, what's the difference will make, right? We always think about what's the difference will make. And then the next one we said, irrelevant, right? We said depreciation expense is irrelevant because it's related with our purchase cost, and then most likely your depreciation expense is fixed if you do straight line. So every year you allocate $20. So no matter you take my order, yes or no, the depreciation expense should be fixed, should be constant. Okay, next one, which one shouldn't be considering, we said is historical cost, right? Like some cost, historical cost. Next one, I'm talking about what amount should this order increase your profit. So you have an order, and then we said the selling price is 170, and then variable cost. Oh, your usually selling price is 170. We said we don't worry about this, the regular selling price, because that's useless to our decision making. Our decision is only looking at that order selling price, and that order is the variable cost, right? And then we found out that for each one, your operating income can be increased by $50 for each. And then you have 200 units per month. So am I done? Why I don't get a number of 10,000? Because they said that you have to do it for the next 2 months. For the next 2 months, really careful, right? So we have to time 2 months. So if you do all this, you will find out your operating income will be increased by 20,000 if you take the order. Okay, so basically it's your relevant revenue minus your relevant cost. Next one, talking about the same thing, but the two things we said, what's the minimum selling price? We said as long as it covers our relevant cost, right? Relevant cost. Direct material and then direct labor. How about this indirect? They said 60% is fixed. 60% is fixed, right? So out of your $10, $4 is variable, 6 is fixed. So what's the meaning of fixed? Like rent, like insurance or whatever. So 4 is variable. That means if you take the order, you have to spend $4. If you don't take it, then it will be 0, right? Because it's a variable. But for the fixed, you don't take it, it's 6. You take it, it's still 6. So there is no difference for that part of a fixed percentage. So we only look at this $4, which is the variable part. And then the question also said that you have to spend extra $4 as the shipping, right? Because if you don't take it, you don't need to pay shipping at 0. You take it, the shipping is $4 each. So now this $4 is the shipping. This $4 is the 40% of the $10 indirect material, indirect manufacturing cost. So if you add all this, you should be able to get the relevant cost will be our minimum selling price. Will be our minimum selling price, $17 each. Okay. Next one is our second situation. We call it a make or buy. And now we talk about with the idle capacity. We talk about later why we have to mention this. So think about this is the general information is you can make something by yourself internally, or you can buy it, you can outsource it and buy it from the vendor. So which one should we choose? And we just look at the relevant cost, right? And then we choose the one with the lower cost. So we also have a make, and then we have a buy. We look at the difference. We look at the difference. So for this situation, you said that you are making 10 pencils, then manufacturing each one is 3. Cost, fixed manufacturing cost is 200, and then 60% of the fixed cost can be avoided if you buy. So if you buy, you can avoid it 60% of your fixed cost. Now you can buy from me at 16 each. So you can do each unit or you can do total. I'll just do the total because kind of it said this is the year. Either one is fine. So you can do each unit, you can do total. Either one is fine. So now make or buy, we look at the cost, right? So if you make, then you have to pay variable manufacturing. $3 each, you are making 10, so you have to pay $30. If you buy, it's 0, so difference is 30. And then we said for our fixed manufacturing cost, total is 200. We said 60%, which is 120, will be avoided. 40%, which is 80, is not avoided. What's the meaning of not avoided? We said 60% will be avoided if you buy. So if you buy, you can avoid it. If you buy, you can avoid it. If you buy, you can avoid the 120. You can avoid, which means you just pay 0 if you buy. But you make, you have to pay this 120, right? It only avoid if you buy. You make, you still have to pay 120. So then the difference is 120. For the $80, if you buy, you can only avoid 120. The other 80, you cannot avoid. You cannot avoid. It means you still have to pay. You still have to pay that $80, which means there is no difference. There is no difference. So no matter you make or you buy, there is no difference for this $80. And then we are not done. We still have the last one of purchase cost. If you make, it's 0. If you buy, it's 100. It's 16 each. So total is 160. So your difference then will be 160 negative. Okay. So what is our total relevant cost? What is our total relevant cost? We said under make, total relevant cost is 150, under buy is 160. So we should make, right? We should make because it's cheaper to get our 10 units. It's cheaper to get our 10 units. Okay, so we should write our conclusion, still say we should make because operating income will increase by $10 total, right, for 10 units. Okay, so that's it for this question. And the next question, we talk about still the same, very similar. You have direct labor, direct material, variable overhead, but then it said you have fixed overhead. They said 55,000 will be avoided. 55,000 will be avoided. And then, so what will happen? What should we do? So out of a 138, 55,000 will be avoided. And then the rest, 83,000 will not be avoided. Remember this situation, only the avoided part will be our relevant information. Because if it's not avoided, then no matter make or buy, you still have to pay that 83,000, right? It's not avoided. You can only avoid this 55,000 if you buy. But the 83,000 you cannot avoid, you still have to pay. So in this situation, you get all the make, you get all the buy, then you find out the difference is 167,000. You total have 12,000 units, so each one is $14 saving. So we should make because each one will save you $14. And then we said avoidable, that means relevant. Not avoidable is irrelevant because no matter what you do, there is no difference. Okay, Next one, talking about this one said you have variable cost and fixed cost, then blah blah. Out of the $50 fixed cost, 20 will be saved, which is avoided, right? The rest 30 will still be there. So we said we do the same thing one more time. You make you buy, you get a difference. So you make you be variable cost, and then avoidable fixed cost, you make it, you pay, you buy it, you can avoid. But for the not avoidable part, make it, you pay 30, you buy it, you still have to pay 30 because you cannot avoid it. So there is no difference for that $30. And then we have this purchase cost. We get that from buy is only under buy. So if you do all the math, you will find out it's better to make, because make gives you $10 saving. Okay, the next one, talking about the maximum cost that you are willing to pay, which we said is the relevant cost of make, right? Relevant cost of make. So you have food that is relevant because if you buy, you don't need to pay. Labor that is relevant. We said the overhead that is told you 40% is fixed. So you have a fixed of 40%, which is 44,000. And then you have a variable, which is 60%. It gives you 66,000. And then it also told you out of the fixed cost, right? 25,000 is the salary, and then the remainder will be the allocated from total company overhead, right? The remainder 19,000 is the allocation, or blah, blah, blah. It said the supervisor will still remain, company will continue to pay, so what will be the whatever. Okay, so the way to solve it is we just look at the relevant information, which is food, labor, and then variable overhead. If you add those three, you should be able to get this answer. So what will happen to this 25,000 and 19,000? What will happen? They are just explaining what will happen to your fixed cost. We already know the overall 44,000 is already irrelevant. So we don't really worry about the 25,000 or 19,000. We don't really worry about the detail. And also the question said for the 25,000, no matter you close your store or whatever, you still have to pay. So there is no difference. And then we said out of that 19,000, that's the allocation. We said in this chapter, the allocation is always irrelevant, because we said the allocation is kind of like an artificial method. It's not the real money. Like every year you have $10 to allocate. You can allocate to 3 different departments, department A, B, and C, and every department allocated 532. So every year you pay $10 out of your pocket as the rent or whatever overhead. And now you are thinking about closing, shutting down this department C, right? You are shutting down this department C. So you have to allocate the $2 to A and B. So now A, instead of allocating $5, it allocated $6. B, instead of allocating $3, you're allocating $4. But do you pay $2 less from your pocket? No, you still pay every year $10, even though you closed the department or you closed your store or the cafeteria, because you allocated $2 more to the other departments. So your total, the extra money from your pocket is not changed. You just changed the way of allocation. You didn't change the real cash flow. You didn't save extra money. You didn't save anything. You just did the reallocation or whatever. It's just accounting part. It's not a real cash flow. It's not a real cash flow. So if the question said, if you close your cafeteria, you really can save $2. So your overhead will change from 10 to 8. Then that allocation, that I would say not allocation, then that $2 will be relevant because it's not just the number allocation, it's the real cash flow. Okay, so that is question 8, and then question 9 we talk about that for the making or buy, we also need to think about variable. We also think about the avoidable fixed cost, right? We think about the avoidable fixed cost. Question 10, talking about this, said you make or buy. So we said manufacturing cost, direct material is relevant, direct labor is relevant, and then we said variable indirect is relevant because it's a variable. For the fixed, we said it's irrelevant because it's fixed. And then for marketing fixed, we said it's irrelevant because it's fixed. We said the variable out of the 2.5, 30% will be reduced. 30% will be reduced, which is $0.7 will be reduced. But the 1.75, the other 70% will still be constant, right? Will still be constant. So it will not be reduced. So what is the maximum? We say it's only our relevant part. It's only our relevant part. It's only this 30% because that will be reduced to 0. But the left 1.75 will not be reduced. It is still 1.75. Therefore, if you do all the numbers, you should find out the relevant cost will make it 6.75. That's the highest price we want to pay to outside vendor. Because if somebody charges you more than this, you will say, well, you know what, I'm not going to buy, I will make it by myself, right? So that is the highest, the maximum price you want to purchase from outside. Okay. Now you will say, we still have the last question. I'll talk about whatever I want to say later. I still have the last question. So this is also make or buy. We said what's the relevant information. Direct material, direct labor, variable, overhead, fixed, not relevant, variable, and administrative fixed is not relevant. So we said as long as it's lower than $47, we can buy. If it's more than 47, we are not going to buy. We are just making by ourselves. Okay, stopping here, I want to make the last kind of conclusion here is that sometimes, so far you will think, hey, this chapter is easy because I feel like the professor said, you just look at it, it's a variable or fixed, right? Look at this question, the professor said, hey, it's a variable, it's relevant, it's fixed, it's not relevant. So that's easy. I don't need to learn anything. I just know variable, relevant, fixed, irrelevant. I will tell you, no, never ever do that. So those is all the 2 wrong assumptions that people will make. Okay, the first wrong assumption is all the fixed costs, they are irrelevant. And we know that is not right. Because think about this question. Total fixed cost is $50, but 20 can be saved if you buy. So you still have a portion that may be different. So we cannot just say, hey, all the fixed costs, they are irrelevant. We cannot do that. We cannot do that. That's wrong. We cannot make the general assumption that all the fixed costs are irrelevant. We cannot do that. Or the other one is all the variable costs, they are relevant. Okay, all the variable costs, you will say, how about the other way around? All the variable costs are relevant. I will tell you, no. Because look at question 10. This is your variable marketing, but it said very specifically, 30% will be relevant and 70% will be constant, will not be reduced, will not be changed, which is irrelevant. So never ever just, just to go around and tell people, hey, you know what? chapter 11 is easy. All the variable costs are relevant. All the fixed costs are irrelevant. You can never ever do that. That's not the right way to say that. But then you will say, hey, professor, then that makes things so much harder. How can I solve the problem? So if the question doesn't say anything about the fixed cost or anything about the variable cost, for that specific question, you can make the assumption, hey, in that question, fixed costs are irrelevant, variable costs are relevant, right? So like this question 10, you look at the fact, look at the question. It didn't tell us, hey, the fixed cost will be saved or 50% or whatever, or the variable 20% or whatever. If the question doesn't say any specific information, we can make the assumption for that specific question. We can make assumption for that specific question. But you cannot go around and tell people, hey, all the fixed costs are irrelevant or blah, blah, blah. All the variable costs are relevant or blah, blah. But when we do our question, if the question doesn't say anything, not like this, the question said, hey, if the question tells you out of the fixed, 20 will be relevant, 30 will be irrelevant, then you go around, then you follow this question. But if the question doesn't say anything, you can make the specific assumption for that question. So that is why in our question 10, although the question said fixed marketing will not be affected, so that is very clear, our fixed will not be affected. But it didn't say anything about the fixed indirect. So for this question, we just make the specific assumption that fixed is irrelevant. That's the reason we don't take it as our relevant consideration. Okay, I think that's all for our first topic and the second topic. Next video, I think I will talk about the third topic, opportunity cost, and then we go from there. Thank you.